Tony, do you think that we will avert a shutdown?
I think we will. I think we will avert a shutdown. I think we will divert a shutdown, Brian. We're going to divert it to February, where we're probably going to be right back at this again. I think we should probably expect that the House probably will pass this bill today. I think that was the reason why the White House had to back down. There were not votes to back his funding for the wall. But there are votes to get this basic deal, this continuing resolution done to take us into February 8th. But boy, it's going to be a volatile first quarter. We're going to have another shutdown looming early in February. We're going to have the countdown to the close of the trade talks with the Chinese and seeing where that goes. We have the debt ceiling coming up. So it's going to be an interesting February-March period.
The debt ceiling, see, this is what I like about you, Tony. You always go right to the point, okay?
Yeah.
The debt ceiling is what caused the 2013 shutdown that caused the stock market to go haywire. It wasn't the shutdown. It was the fact they were shutting down over, effectively, a debt crisis. I know it's 2 months away, but that's the blink of an eye in D.C. terms. Are we going to have another debt ceiling crisis?
It's going to be tight because we're going to want to see whether in this case whether the White House is going to be pushing for a clean debt ceiling increase. I think they probably will. It's where Mnuchin has been in the past. He set the administration on this course of not.
What does that mean? It's D.C. speak, clean
DC
debt
speak
ceiling.
means that there were in the past, either party, depending on who's in the White House, would try to negotiate for some kinds of concessions in order for their party to put up the votes for a debt ceiling increase. And there was a lot of concern that Republicans were going to ask for lots of things last time. And Mnuchin actually said the administration is in favor of a clean debt ceiling increase, which actually made a lot of people happy and made the Freedom Caucus far-right Republicans stand down in that fight. It's not clear that's going to happen again with the House controlled by Democrats this time, and where Democrats are going to have to put up a big majority of the votes for the debt ceiling, whether they're going to want to negotiate with the White House. So it'll be fascinating, and these things are going to come together.
We're going to feel good going into 2019 if we don't have a government shutdown, kind of like, okay, maybe things are solved. Your point, it sounds like, Tony, is, once again, they are not solved. Nothing is solved.
Nothing is solved.
In fact, January and February could be more volatile from a political perspective. And by the way, the new capital of Wall Street is actually where you are, Washington, which means maybe we could see continued volatility in the equity markets because of all the D.C. dysfunction. Am I hearing you right?
That's what I would expect. And obviously, what we saw with some of the hints we got from the Fed chairman yesterday, as you've been talking about this morning, are contributing a bit to that as well. I think there is a lot of uncertainty for the first time in a long time. Looking forward, 6 months to a year, there's more uncertainty from a policy standpoint, from an economic standpoint, and from a market standpoint than we've had in a long time. We've kind of got used to, slow but continued growth, somewhat steady policy situation, and the markets, pretty much looking at a one-way bet on where equities are going, and we're not in that situation anymore.